to this recording of the 2023 Assessment of Professional Competence. In this video, we're going to have a look specifically at Task B. How we will unpack this is first to look at what was presented to candidates in pre-released information to identify what was triggered for candidates during their preparation for the actual assessment or the exam on the day. Secondly, we will have a look at the information on the day, what candidates were presented with, and what changed from the pre-release information, if any. Then we will eventually have a look at the task at hand, specifically for Task B, and also at what the response would have looked like that a competent candidate could have been expected to display. So let's get it started. So the information in the pre-release document that relates to Task B specifically was found in document 3, where an email was sent from Sergio Anthony to the financial analyst. And in this email, he referred you to calculations that you're going to need to review. And these calculations broadly relate to the capitalized aircraft assets and the possible impairment thereof, and then also aircraft maintenance. Now, based on these 2 points, it's clear that IFRS 16 leases and IAS 36 impairment was triggered from a technical perspective, and looking at the aircraft maintenance, IAS 16 property, plant and equipment, and also IFRS 16 leases is triggered. This is followed by a possible allusion to the task that might come up, where it's noted, to make doubly sure that these amounts are accurate, I would like you to review the calculations that he prepared. Unfortunately, I accidentally deleted the email. I requested Julia Oliver, our junior accountant, to resend it to me. I will forward these to you as soon as he sends it. So this is clearly identifying the possible task that you would probably have to do on the day of the assessment. And finally, it ends with, you do not need to bother with the tax implications at this stage, which could indicate that at this point, you don't need to look at any of the tax implications, but possibly it could come up at a later stage. If we then move on to the information on the day, the financial analyst then eventually receives this email as promised in a pre-release. And the task at hand there is to say, please review and email any comments you may have on these calculations and explanatory notes to me, including your comments, any additional questions you may have and or information you may require to conclude on the accounting treatment of these items. We need to make sure we have done everything correctly to be ready for the auditors, and then you may ignore tax implications. So it's very clear here what the task at hand is in the email, and attached to the email is then the accounting calculations that the financial analyst needs to review. If we just then unpack the specific task for this part of the case study, it's technically twofold. So the actual task is respond to Sergio's email requesting assistance with the review of the calculations and explanatory notes that were prepared by Greg and Rashid Consulting. But if we unpack it and we revert back to the actual email, in the email, you were required to review and email any comments you may have in all the calculations and explanatory notes, and then also include in the comments any additional questions you may have or information required to conclude that the accounting treatment is correct and complete. So if we then move on to what was given on the day. So on the day, attached to this email was 3 calculations. And we're going to unpack them now and also look at what was given, and then also what candidates could have questions or when they did their review notes on these calculations. So the first calculation that was provided was the depreciation on the leased aircraft. If we unpack this, you will see that the aircraft, we've got 4 components there. There's a main aircraft, the engine, the flight and food service equipment, and also the in-flight entertainment system. And then candidates are provided with the cost of these components, the depreciable amount, the life that was used to depreciate, and then the depreciation calculation. So what we've done here for purposes of this feedback session, you'll see that these different components that need to be addressed was labeled with alphabet letters, and we're also now going to unpack this calculation in that order. So if we look at the total depreciation at part A, we could have expected of candidates to see, well, if you look at this depreciation amount of 31 million rand, if you compare that to the forecasted figures that was provided in the financials, which was 64 million. We could have expected here of candidates to pick up here that there's quite a significant difference in the depreciation calculation compared to the forecast. So if they questioned something in this area, it would have been a valid question to ask. Then if we look at the components on the left-hand side at B, candidates could have questioned here whether the use of a component approach is appropriate for a leased asset. So what's just important here is this is the depreciation calc on the leased asset. So in other words, the right of use asset that was recognized. So candidates could have questioned, would it be appropriate to follow a component approach for right of use assets? And they could have further then questioned, well, if it was appropriate, how was these cost elements measured in the cost column? If we then move over to the life or the years part, if we look at part C, candidates should have questioned, because this is a right of use asset, the depreciation should have been over the lease term of 10 years and not the useful life, because ownership of these does not transfer. So candidates should have picked up that in this depreciation calculation, it seems as if the useful life was used at the 20 years and 15 years, although ownership does not transfer, which would then require you to use the shorter of the two, which would in fact be the lease term in this situation. Then, if we look at the last two components for flights and in-flight entertainment, here candidates could have picked up that it does make sense that the useful life was used here because it is shorter than the right of use period. This is now also the first instance where candidates could have asked for some additional information to be able to substantiate this calculation. Here they could have asked to obtain a lease agreement to determine who's responsible for replacing these components within the aircraft, as this would have an implication on the useful life that will be used to depreciate that component. Then if we look at E, what was very clearly triggered within this scenario is that there's quite a lot of major inspections and overhauls that takes place on these leased assets. So candidates could have also questioned, so why is major inspections and replacement overhauls not identified as separate components and depreciated separately? And they could have also here in the same instance questioned that it may be more appropriate to depreciate these items based on flight hours and not the useful life, because this would typically be the driver for the consumption of the economic benefits, i.e. the depreciation on replacement parts and overhauls and major inspections. Lastly, what candidates could have questioned in this regard is the residual value. Firstly, from a perspective that why do we have a residual value if ownership does not transfer to the lessee? And lastly, it seems, looking at this calculation, as if a blanket residual value was used for all the different types of components, which in fact does not make sense. And it's a little bit unrealistic, as these different components would probably have different residual values. If we then move on to the second calculation that was provided, we're looking at the maintenance cost, and there they told you the total maintenance cost summarized from the general ledger amounts to 131 odd million. And then they give a description to say that the above amount relates to routine inspections and maintenance, major aircraft inspections, and replacement of significant worn out broken parts. And then they further go on to state that the total amount should be recognized as an expense. So firstly, here, candidates should have questioned, what does this amount consist of? And how much of that 131 million consists of maintenance, what is general maintenance, what's routine, what's major inspections, etc. So candidates here could have asked for additional information around what that amount is made up of to further be able to interrogate that figure. Then we would expect candidates to further identify that it would be incorrect to expense everything, as only routine inspections and maintenance, i.e. day-to-day cost, should be expensed, whereas major inspections and replacement of significant parts should in fact actually be capitalized and not expensed. And that is why you would ask for a breakdown of these costs so that you can further interrogate which of that 131 million is technically related to routine and which is not, to be able to correctly determine what should be expensed and what should be capitalized. The third calculation that was provided was the impairment calculation on aircraft number 3. And here they say each of 1 times 4 aircraft flies a specific configuration of routes, in flight times and is essentially a separate operation within the bigger company. Each aircraft is therefore a cash generating unit as defined in IAS 36. We have considered whether there are any indicators of potential impairment on each aircraft, and we found the economic performance of the third Airbus is worse than expected. So here they explain why they impaired aircraft number 3. So what we first here could have expected of candidates to pick up as to question why was only this one aircraft tested for impairment, because OT actually operates 2 routes and therefore other aircraft may also be impaired due to the lower demand. So what candidates could have asked for here in addition is to obtain an impairment calculation to obtain comfort about these calculations for the other aircrafts. And then second to that, candidates could have dealt with questioning why is each aircraft identified as a cash generating unit instead of perhaps rather using every route or a different grouping of assets with proper explanation. But it comes down to questioning why aircraft number 3 is a CGU and not anywhere else. Then the second part of the calculation actually got down to the numbers. So it starts off by including assets and liabilities to get to the total carrying amount of the CGU. So what candidates could have questioned there is to state that only assets attributable directly to this CGU should be included. So what they could have questioned here is, are we sure that all these assets only belong to this CGU? Specifically, if you look at trade receivables and cash equivalents, were they allocated properly to this CGU? Because it seems as if these figures are just taken as is from our projected financial statements in totality. And then candidates could have further questioned the completeness here of these assets. So are there any other corporate assets that should have been allocated to this calculation? And also any directly associated liabilities, because it seems there's only assets that have been included here, and there's an obvious liability that's missing for aircraft 3, because remember, this is leased. The lease liability was not included in calculating this carrying amount. That is something that candidates could also have identified. Then if we look at the average projected cash profits per annum and inflow, candidates could have questioned here, why are we using an average to calculate the value in use? Because we should, in fact, actually use the actual cash flows over the remaining period. So here, candidates could have also asked to obtain management forecasts to assess the reasonability of the 24 million that they used there to calculate the value in use. Then further down in the calculation, it indicates that the South African prime interest rate of 11.25% was used to discount, and the amount was also, the discount rate was an after-tax discount rate which was used. So candidates firstly here could have identified that the SA prime rate is not an appropriate rate to use, as an asset-specific rate should have been used like WACC, which will take into account the risk specific to the asset. And then also, what's very important here is to have questioned the fact that why was an after-tax discount rate used, as the assets carrying amounts included in the carrying amount of the cash generating units are in fact before tax amounts. What's also very important here to have identified is the remaining period. So the period that they've used to calculate this value in use is 10 years. But remember, we're trying to calculate the value in use here of the right of use asset. So quick candidates should have questioned here, well, on the date we're doing this impairment test, there's only 7 years remaining. So it would be incorrect to use a period of 10 years in calculating the value in use. And then also lastly, when they calculated the impairment loss and the carrying amount that was calculated here on the previous slide of 177 was compared to only the value in use. But in terms of IAS 36, the value in use would be the higher of the fair value, or the recoverable amount rather would be the higher of the fair value less cost to sell and the value in use. So therefore, candidates could have questioned, why did we only compare it to the value in use and not the higher of the two? And they could have asked for additional information around the fair value less cost to sell as well. So looking at what we've covered throughout all 3 calculations, it's very clear that there's quite a number of things that candidates could have questioned and additional things that they could have asked for. What was just important here to be able to get recognition or credit for the points and the review notes raised. It was important for the candidates to display why they asked the question. So an example of this would be a candidate can't just ask why is an after-tax rate used and stop there. We do expect more, in fact, to give a reason why we're asking this question. So if to get credit, for example, for the tax element here, we would expect candidates to say, why was an after-tax rate used? Because either a before-tax rate should be used, or the assets carrying amount that we are comparing this value used to are before-tax value. So it's very important that it's not just a question without any context to why the question that is asked is relevant to what we're trying to achieve here. So looking at all three calculations, there's quite an abundance of questions and additional information. So to have been deemed competent in this task, it was expected that candidates covered at least all three calculations that were provided on the day, and also have obtained coverage of the issues, of which there were quite a number of, and valid coverage by identifying or raising the issue or the question with a reason that gives context on why it's relevant to ask a question. This brings us to the end of this presentation. Thank you for your time.